Okay, ladies and gentlemen, it's time for the end of day post-wave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous post-wave price trigger reports that you can now get with a amazing discount. Just go to PulseWaveTrading.com, take advantage of our Christmas special. All right, so today was FOMC day, and there was a press conference afterwards, and they were talking about hiking interest rates at least 3 times next year, and then 3 more times in 2023. And also the Fed mentioned that they were going to escalate their tapering. Okay, so how did the markets take this? Well, take a look at this gold futures chart. You'll see here that the market absolutely just collapsed. And then what did it do? It rallied into the close. So even though we got down to that 1750 handle, which coincides with the bottom of the Kumo cloud on the algo chart, the market came right back again. But we are still in a bear market, still in the red zone. All right, still below the trend line resistance. And I think we're still on track for this August 9th consolidation bar / bearish pointer. And now that we've created a bearish pointer on today, I think for the most part, the market's gold's going to trade in a sideways pattern, with this bar here, this bullish pointer here being the high point, and this bearish bar today being the low point. And I just see prices consolidating further within this price range. So that's what we're shaping up with as we speak. And I think that's going to carry it for the remainder of the year as we're getting close to the end of the year. All right, here is silver. Silver had an exact situation. It crashed down, then rallied into the close, took people and scared them to death, getting to the low 21 handle, threatening to go below 21, and there you go. The thing that's interesting here, though, is that silver already took out the bearish pointer back here from August 9th, and is now putting in like a double bottom at this level. But it's also a bearish pointer on the daily. So unlike gold, I think since we have a rally alert buy signal for tonight into tomorrow's trading on silver, I think silver has a better chance of trying to put in a short-term bottom. It's been more bearish than gold, and we don't have an additional buy signal here. We had the rally alert buy signal back here, and we really haven't gotten any upside production from it, but the bulls are keeping the price level and not letting it, get weaker. So very interesting developments in your gold and silver market. Now contrast that with your Bitcoin, and this is what your Bitcoin did today. Here's the Bitcoin futures. As you can see, we came into today with the rally alert buy signal, and that's exactly what you got. But you also made a bearish pointer on the day in the futures. So even though the bulls are managed to get a little bit of traction today, you're still inside this consolidation bar of December the 13th. Price action is just staying within that bar. And bulls right now are fighting at this resistance at 50,000. All right, so 50 to 55,000, the old consolidation zone, the old resistance zone. The market's trying to get back to that level. We'll see if Bitcoin can do it. But so far, not really looking like there's any conviction on that side of things. If you take a look here at crude oil, all right, crude oil futures has a rally alert buy signal for tonight into tomorrow's trading. We got this bearish pointer back here. I think that the market's going to have to contend with, but it's going to try to get back up to around the $73 handle, maybe even 74. But at some point, we know we have to come down here and test this bearish pointer. So I wouldn't get too excited on that end yet. Here's ADA Cardano. Had that upside production from the rally alert buy signal coming into today. I think this was going to try to get back to maybe $1.50 or so. So we'll be watching that one. As far as what the tech sector did today, here is your Nasdaq 100. And we had that rally into the close as well. Very interesting bar because it stopped short at the top of the Kumo cloud and then rallied. So we got sort of a bearish pointer on this one, but that Nasdaq is really trying, to recover more so than the other markets. But we're still in the beginning stages of a red zone, so this rally could get clobbered in the overnight market. Very interesting development. And as far as the euro goes, here's what your euro is looking like. It's trading water. The bulls are keeping the market afloat. I still think it wants to try to get back up to the 114, 115 handle. We'll see what happens. We're not really getting any new lows here. We're not really getting any downside production. The bulls seem to be keeping the market afloat. So for the most part, this is what it's looking like, folks. I mean, the markets, for the most part, we're just waiting to hear something from the Fed, anything from the Fed that sounded good, and I think they got somewhat of an answer. Here's your Australian dollar. Not relying on gold at all right now, and it's trying to head into new highs. The bulls got this going. It wants to get closer to that trend line resistance overhead. And then finishing out today with Ethereum. Here's Ethereum. Ethereum rallied too, but you do have a bearish pointer. This Ethereum right now is kind of moving like the Nasdaq 100 futures. Very similar bar construction here, except for with the Ethereum on the algo chart, you got this very wide Kumo cloud, and you got this bearish consolidated bar, this bearish pointer consolidated bar from December the 4th that's keeping prices contained within that. So anywho, that's what we got for today. Just wanted to go over the side effects of the FOMC statements and press conference. So now you got your marching orders, you got your dashboard updated with tonight and tomorrow's price trigger. So go out there and do what you got to do. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.